Well. Now, I'm not here. This video is not about telling you I told you so. But, I'm not going to say that I've been ringing the alarm for the past couple of years, but so an article just came out. Welcome back, everybody. Look, I started the video off already. Welcome back, you guys. I'm Ashley Pickens here in Memphis, Tennessee. If you're new here, well, you came in on the right video. You got here just in time. Let me say that. So I'm here in Memphis, Tennessee. I've been in real estate since 2006, you guys, as a real estate agent, also as a real estate broker, but y'all know me as your auction mama. I'm the one at the courthouse auctioning off foreclosures. I say going once, going twice, sold. And I come on here and share information about the distressed real estate market. So, you guys, an article just came out. Time out. You guys, I have a masterclass tonight. It is Tuesday, July 15th. I have one tonight and one on Thursday, July 17th. So if you are watching this video and you want to learn about pre-foreclosures and reaching out to homeowners in distress, because you know that is what I do, come to the masterclass tonight. The link is down below. If you're seeing this and it's after Tuesday, then come to Thursday's masterclass. Thursday's masterclass, all about bank-owned properties, how to find them, how to buy them, how to make offers, all that kind of stuff if you're interested in REO and bank-owned properties. So, back to what this is about, you guys. New article came out, and we're going to read it. We are going to read it for understanding. If there are two things that I can do, I can talk and I can read. So, I will link this article down below. I have been ringing the bell. Date the rate, marry the house. Y'all, I told you. Y'all sending your clients straight to me at the courthouse, telling people to buy a house in hopes that the rate will go down. So let's read this. Let's read this article, you guys. HousingWire put out, dating the rate misled borrowers. Now they're financially strained. Shocker. Right? Now, don't get me wrong, you guys. If you are in this situation, you guys, nobody ever buys a house thinking about that they might be in foreclosure or thinking that they're going to struggle to be able to afford it, right? You buy so much that goes into purchasing a house, right? And it's just, okay, let's keep going. So, an out-of-date mantra, I'm from the South, that once lured in prospective homebuyers is being criticized by originators who say clients were led astray. So if you don't remember, everybody in the real estate industry, not me, was yelling, date the rate, marry the house, because rates were going up. And people were promising that rates were going to go down. Even though Uncle Jerome Powell said, y'all, I watched the meeting. I watched it. Right? Because I don't trust the news, right? Because they translate it he'll say something, the sky is blue, and they'll come back and be like, the sky is a little cloudy, but it's going to clear up. Baby, that's not what he said. He said the sky is blue, right? So Jerome Powell said rates are going to stay higher for longer, right? The American people are going to feel some pain, right? That's what he said. Now, when everybody started yelling, rates gonna go down, date the rate, marry the house, I'm like, that's not what he said, right? He said they're gonna stay higher for longer. So the whole real estate industry is yelling, date the rate, marry the house. And I'm getting phone calls from people who just bought and in foreclosure, right? And I got something about that too. I have, people who work auctions and foreclosures all across the country, and we're seeing it. We're seeing people who just bought in the last 4 years in foreclosure. Their house is up for foreclosure and they just bought that house. So let me read the article, y'all. I'm sorry. Let me read the article. And we're going to read this article, okay? You can read along with me if you want to. I'm the kid that the teacher used to call out because I could read. So, marry the house, date the rate is a phrase that was popularized. Well, I said I could read. Popularized during the post-pandemic era of rising mortgage rates. Lenders urged borrowers to focus on finding a house they were head over heels with and worry about their interest rate down the line. Y'all, that don't make sense to anybody. Nobody. That makes sense to nobody, right? I had a friend. I know y'all like, Ashley, really read the article. Listen, I had a friend and she bought a house. I think it was 2019. She had to have bought in 2019, right? Because I remember 2020, our kids were exchanging books because, we were on lockdown, so our kids were trading books. Anyway, when rates went down, like 2021, she called me and she was like, I'm thinking about refinancing. And she's like, what do I have to do? And I was like, you got to get that whole loan again. It's the whole loan process all over again. And she was like, what? I said, yes, tax statements, bank statements, check stubs, everything. They want to see everything all over again. She was like, no, I'm going to hold what I got. I'm like, it's a process and there's fees with it. And I always say that was the narrative. That's the information that nobody else was saying. We weren't telling what it took to refinance. It was just date the rate, marry the house. And people just thought they could call up their lender, I guess, and was like,
hey, it's Sarah on 123 Main Street. Yeah, I'm ready to refinance, so put that in. Thanks. Okay, bye-bye.
Y'all, that's not how it works. And nobody was actually saying the process of refinancing. Right now, maybe people who are in the industry, we knew, but I feel like the people in the industry didn't even know what refinancing takes. You're getting that whole loan again, right? So now, look, I haven't even read the article. It's because I've been saying this for so long. You guys, you'll know how you get frustrated. You're like, I've been ringing the alarm. Like, stop saying this. And then NAR came out with an email that said, stop saying it. Why? Because it's predatory lending. Y'all look up predatory lending. Look it up. Promising a lower interest rate in the future. Yeah. So anyway, NAR retracted that, put out an email to the industry and said, stop saying it. Anyway, you guys, hold on. Let me keep reading. We're going to get through this article little by little. Just put up with me. Because I've been saying this. Right? And now people, y'all know 40% of refinances have been getting denied. 40%. So everybody who was promised to date the rate, baby, y'all go together. Y'all married at this point. Y'all not dating anymore. It's a full-blown commitment. Right? Now, trying to refinance, y'all, the job market, you see how many people getting laid off, right? Every day, every 10 minutes, somebody got a new HR pop-up email meeting on their calendar with them in HR every day. So again, like I said, in order to refinance, you guys, you have to go through that whole process all over again. So now you don't have that job that you had to qualify for it. If you were struggling or holding, when people say they struggling to pay a bill or they trying to hold on, what does that mean? That means they're probably paying late, right? Or they gonna pay half and then try to pay the other half. Get a late payment on your mortgage. Get a late payment on your credit. They will deny you. Max out your credit cards trying to pay bills. They will deny you. So 40% of refinances are getting denied right now. So I feel bad. I know y'all gonna come on here and be like, I don't feel bad. I feel bad for people that you didn't know, right? Your real estate agent who you trust and who you think has a license and knowledgeable about real estate telling you, go ahead. They now you can refinance. You don't even know what refinancing is. Now when you call them, call your agent now who told you to date the rate. Call your agent now and see what they say when they pick up the phone.
The number you have
I told y'all, they doing taxes now. They don't even do real estate anymore. So we're gonna get through this article, you guys. Okay, so, and worry about their interest rate down the line. Pick up back where we read, you guys. Borrowers who were accustomed to rates hovering near 3% didn't realize how long dating the rate would take. They've been dating you for a long time with no commitment. This left many to be in an unintentional long-term relationship with their mortgage rate. Flash forward 3 years, not only have many homeowners been unable to refinance, but their monthly payments have increased due to rising property taxes and insurance costs. We have all heard of property taxes going up and insurance going up or dropping you. You guys, when everybody was bidding up $40,000, $50,000, $100,000 over asking, you knew the city, your city and county was coming to get their money. Now all the prices have gone up and the city said, hold on. Y'all not going to keep paying taxes on these low home values. Everybody go out and reassess. And now everybody's taxes went up. Or if you bought a brand new house and you just had that first tax bill was based off the land, and then year 2, now your tax bill reflects that house sitting on the land. Let's continue on, class. On top of that, most 2-to-1 rate buydowns have expired, leaving borrowers to either face financial strain head on or consider other options like taking out an adjustable rate mortgage or purchasing discount points. Okay, class, and if you don't know what a 2-1 buy down rate is, listen, I'm going to take y'all to school real quick because I don't automatically think everybody speaks real estate. I speak real estate, English, and profanity really good. So let's say a 2-1 buy down is basically a temporary discount on your mortgage interest rate for the first 2 years, right? So let's say your full mortgage is like 7%. When a 2-1 buy down, in year 1, you only pay 5%, right? And then year 2, you pay 6%. And in year 3 and beyond, you pay the full 7%, right? If you had a 2-1 in 2021, 2022, maybe your 2 years, you at the full blown interest rate. You know what I mean? So everybody's interest has adjusted to the full, so your mortgage payment has gone up. So understand that's what 2-1 buy down, that's when you hear that, that's what it means. Okay, so let's keep going. I'm trying to make sure y'all understand. Oh, Mark Worthington, a Bend, Oregon-based branch manager for Churchill Mortgage, says that clients were misled by loan officers who thought they could predict rates, leading them to push their budgets. Baby, I told you at the end of the day, that mortgage is between you, your wallet, and God, and your bank account. That's who it's between. That's why when I see 50, 60,000 buyers backing out of deals, I'm like, well, maybe when they got those final numbers, it didn't sit well with their spirit. You know what I mean? Because at the end of the day, it's you, yourself, and you, me, myself, and I paying that mortgage. So I equate buying a house with a lot of analogies. But if you have to convince yourself that the person you're dating is great, and then you think to yourself, yeah, but that's not somebody you should date long term, right? Worthington said, offering a different perspective on the phrase, and yet we wouldn't go into a relationship with that yeah, but scenario. But people bought houses, maybe some because of that slogan and the mindset that rates are going to get better. And it is 2020, it is the middle of 2025. And rates still have gone up, you guys. So I don't think we should ever count on rates at any certain time being a certain number because it's too hard to predict. I mean, 2 years ago, Fannie Mae predicted that by the end of 2022 or 2023, rates would be in the high 5s. We're not. We're still in the mid to high 6s. And if your credit is not good, baby, you in the 7s. You in the 7s. That's where you are. 7s. Originators, he says, didn't do enough education on debt to income ratios with their borrowers, leaving many to become house poor. Y'all, they said there is a lender, they didn't call whose name it was, a lender who 50% of the loans he originated go in default on their first payment. It's given 2008 vibes. 50% of his customers default on their first payment. Most loans have a typical debt to income DTI ratio of approximately 45%. And if someone's buying a house and the only payment they have is a house and they push to the 45% number, well, they're not giving themselves any allowance if they have to buy a new car, or their kids have lessons, or if somebody loses a job, or they gotta buy four new tires, or if they gotta buy a dozen eggs, right? So They're not giving themselves an allowance to necessarily do something with their life other than pay for their house. Baby, and y'all know when you pay for a house, it comes with some other bills, right? Maintaining the house, cutting the grass. You don't have a property manager anymore. You got to cut your own grass, right? Anything that breaks down, you have to fix. And half these home warranties, y'all know home warranties. That has resulted in unsustainable payments. It's definitely hurting people. It's definitely eating into people's savings, says Melissa. That's not where any of us wanted to be right now. But unfortunately, through various circumstances, we are where we are. You guys, I have a friend who does auctions in Austin, Texas. I keep saying Texas. Y'all need to buckle up. Austin, San Antonio, Dallas, Houston, all of you. Texas. I sent her this article and I said, this is all I'm seeing. Everybody I'm auctioning or in foreclosure, they just bought their house. So most of them don't have any equity. That's all she's seeing in Austin. Nobody has equity. She's having a short sale. Everybody she's got there. And she says she just filed 15 new foreclosures. You have to file that public notice before it goes up to auction. 15. All of them bought in 2023. All of them in foreclosure. Her whole list just bought their house in 2023 and up for auction. Y'all, it's a storm brewing. Let me keep reading, y'all, because we're going to be here all day. And I got a master class to teach tonight. So, solutions are limited and far from perfect. You can ask if people refinance, can you take an adjustable rate and do any better? Can you do an interest-only ARM and do any better on a monthly payment? She said, but no one can magically change rates. Then why was you yelling, date the rate, marry the house? That shouldn't even been in the conversation. We can't predict rates. I knew a mortgage lender who was like, rates will be down by the end of the year. I mean, saying it with his chest. Rates will be down by the end of the year. How you know Jerome? I don't know Jerome like that. I just see him on TV. How you know? And when he talked to me, he said rates are going to stay higher for longer, is what he told me. So, Cohen admits that way back when she did throw the marry the house, date the rate, because everybody was saying it from the top to the bottom. They were. She did throw the marry the house, date the rate phrase around when talking to clients. There were times when it really seemed imminent that rates were going to drop. When? I didn't see that time. I never saw a time when rates were going to drop. I never saw it. I didn't see the time. But you look back at COVID. That's a good learning lesson where you never say never and that you always have to prepare your buyer. Or where people just stack, or where people just getting commissions. You know what I mean? Where we just folding our arms with our back straight with our coffee and collecting commission checks. I've only had one client who's calling me that's been struggling with a monthly payment. Just because only one calling don't mean none of the rest of them are struggling. Because a lot of them calling me. Here's the list of foreclosure letters that I'm sending out. This is from literally Friday, Monday, and today. Foreclosures. Okay, so she said, I've only had one client who's called me that's been struggling with a monthly payment, and that's someone who used one of those low document loan options to get approved, where they were not relying on their taxable income, or they were probably stretching a little further than they should have. Them low docs where you don't have to turn in and prove, where you really low docs, that's what it, I mean. Worthington and Cone agreed that a massive geopolitical event or another pandemic would have to happen for rates to reach their previous low points. Baby, if you think these rates are going to go down to 2% ever again in life, no. No. That's not going to happen. Now, maybe they'll get to 5, but they're not going to be back down to 2. Okay? We thought rates were going to come down a few months ago until the president announced his new tariffs and announced his new spending bill. The Fed would have cut rates if neither had happened the way it did. But I think that anytime you go into a mortgage, you have to go in knowing that there is a risk that the rate may not come down. Then y'all should have said that then. You didn't say that, did you? When you were saying date the rate, marry. You didn't. It was a period. It wasn't a comma. That you have to go in knowing that there is a risk that the rate may. You didn't say that. That wasn't included. So Worthington worries that the inability to refinance will cause two regretful circumstances: buyers who are forced to sell their home or being unable to make payments. I told you, sending them straight to me at the courthouse. Straight to me. They're going to get themselves into some financial and credit jeopardy because, regretfully, when you look at the affordability of housing, now is the one of the lowest levels. Y'all, I can read. Now is one of the lowest levels it's been in history. Yeah, houses are just unaffordable. Even if rates go down, houses are still unaffordable. And when we look at our expenses, you go back 25 years and we didn't have cell phones that we replaced every year. We didn't have the internet and all these streaming services we paid for. We didn't have apps. Baby, that is not, everybody is not struggling because of apps on their phone. That is, y'all struggling because of the apps on your phone? I didn't think so. I think it's just life, and the electric bill is high, gas is high, taxes are high. Y'all know what I'm saying. Eggs are high. Life is high right now. Kids cost money. Everything is expensive right now, right? Like, it ain't the app on the phone. I mean, maybe they live in a different life than I live, but it's not the apps. Definitely. Student loan payments about to kick in for a lot of people. You know what I mean? It's life, right? Done a ton of 2-1 buy down, she said, but one of the things that we really coach on is that final payment. What is that final payment going to be, right? After the 2-1, after the 2 years have passed, when it balloons to that full interest rate, are you comfortable with that? And then during that 2-year period, is there a financial plan that can be in place to even set up those savings? So a lot of people were thinking, like, if I do the 2-1, within those 2 years, interest rates will have come down. I can refinance out of that and get a regular interest, right? But that's not what happened, right? Interest rates went up. You came out of those 2 years and now interest rates full blown, right? Or you thought the 2-1, after the 2 years, interest rates will be down and you have a lower payment. That's not what happened. That's not how we buy houses. It's not a shirt. Like, you buy it that you can afford comfortably, not barely, you guys. I'll let y'all read the rest of the article. I'll link it down below. But here we are. Here we are. People are in foreclosure. Millions of people are in foreclosure right now. And one of the ingredients in the recipe of foreclosure is people thought they were going to be able to lower their rate. They thought rates were coming down, right? Now, there's all other factors, layoffs, everything. You know, it's not just this. But this is definitely one of the ingredients. I'm telling you. I don't know. And I'm not blaming anybody, you guys. I'm not saying anything like that. But here we are, right? So if you are behind on your mortgage, or if your mortgage payment is getting to be a bit ridiculous, you guys, do what you have to do. That's what I say. Take care of yourself. If you can't afford it, y'all try to sell it. But I know y'all, houses aren't moving like they were moving. You know what I mean? So price it accordingly. If you are a buyer, negotiate. You guys, do that. Don't inherit somebody else's headache. And if you can't afford it, y'all, I record a video every month about how many buyers back out of their deals. If you can't afford it, you can't afford it, right? Because at the end of the day, it's going to be you, your mortgage, and your bank account trying to figure out how that bill is going to get paid. Okay? So, you guys, and if you're in foreclosure, you guys, talk to your lender. Talk to your lender. Open your mail. Talk to your lender. Communicate. Ask and see if they have some assistance. Most mortgage companies have a loss mitigation department that can help you. Okay? So, you guys, that's it. I'm not saying I told you so, but I'm just saying that's it. That's the article. Okay? So, masterclass tonight, Tuesday night. If you see this in time, click the link, sign up for it. There's also one on Thursday, you guys. So click the link, sign up for that. I'm on Instagram, Your Agent Ashley on Instagram, you guys, and I'm right here on YouTube. So if you enjoyed this video or enjoyed my reading skills, you guys, don't forget to like, comment, and subscribe, and I will see you in the next video.